So how are we doing? Last week we said it's going to be a crazy week and it did not disappoint. It was nuts. There was a lot of companies reporting earnings, some good, some were bad, a bit of a mixed bag. Stock market moved a lot. Some stocks moved up a fair bit, some stocks moved down a fair bit. And it was a crazy one. I think overall it was a good week for me personally. I think my portfolio did quite well. I had a few stocks that performed very nicely last week. So yeah, I think the stock market has, for me personally, been carrying on this kind of bottom that we've had for the last kind of 2 months, and we've kind of flatlined, and a few stocks have certainly rebounded a good, like 30-40% since then bottoms. We enter a new week of earnings, and I thought, let's point through these stocks to be keeping an eye out on their report earnings. So and just let you know, if you want to join the Patreon, the link's in the description. If you join through there, you get 2 exclusive videos a week, and you get to know what I'm buying and selling in real time. I just did a review of my thoughts of companies that I own that report earnings last week, as well as a shout out to a couple that I don't own but thought they were quite interesting. So yeah, there's that there as well if you want to join. I was also thinking about making a video about bashing everything money, but I think I'll leave that later in the week. And also a bit of an awkward one. I called it stocks to watch this week, even though it's on a Sunday, just because I thought it'd just date it too much. But yeah, bit of a weird one, that one anyway. But anyway, let's get stuck on some of these earnings. So just one UK stock that I want to shout out before we get on some US stocks. GRG, Greg's. We used to be the Greg's channel. We've rotated a bit. We used to be the Greg's channel for a little bit, then we moved to the Boohoo channel. I'm not exactly sure what we call ourselves nowadays, but those were two UK stocks that I focused on a fair amount. Greg's, so it's a stock that I've owned or own. I have sold some shares. I sold some shares actually a couple months back. I locked in 100 and something% return, kind of towards these highs back up here, which was a really good time to sell. So I sold that off half my position. Locked in some really nice profit. I've kept my other half of my position, which has been declining a little bit recently. I think I'm still 40% up on that position, and I'm just holding that one. I do collect a really lovely dividend, as you can see here. The thing for Greg's at the moment is a bit of an awkward place because I don't want to sell my position that I have left in, because I think I can get more for it. I still think Greg's has a good future. And at the same time, I don't want to buy any Greg's because I don't think it's cheap enough. Around about this 2,000 mark or 17 times earnings, I would like it to kind of get down to the kind of 11 times earnings possibly if it could. That's where I'd like to see to pull the trigger really on this one. So we'll see what happens. If it does kind of get down there, I don't think it will do, but that's where I would be interested in buying it. But just to shout out, Greg's are reporting earnings on the UK side of it next week. So there's a few UK companies that are reporting, but as you can see from this list here, but I thought Greg's was one of the big ones to be shouting out that I currently own as well. Taylor Wimpey as well. I know some of you guys like that one as a bit of a house builder. So yeah, just ones to shout out there. And then we get on to the US side of it. So the US side of it, once again, is a bit of a busy one. So we've got on the Monday, nothing too much that I am bothered about on the open. On the close though, Pinterest, we'll speak about that in a second. Activision Blizzard, be interesting to see how they're doing. Obviously there's a bit up in the air at the moment if they're going to actually merge with or be bought out by Amazon, Microsoft, if it gets allowed. We have Arista, which is a company that I do track. But yeah, that's one I do keep an eye on, but I don't own. But Monday, the big one for me Monday is Pinterest. So Pinterest is a bit of a tricky one. A lot of stocks have been having a bit of a rally. This hasn't really had as much of a rally. In fact, it's kind of just been flatline really, as you can see here. I think that there was a bit of negativity baked in with the Snapchat earnings, and then it also had a little bit of a run up. So it's a bit in no man's land at the moment, Pinterest. Obviously, I'm quite bullish on Pinterest. I've been buying a few shares in Pinterest. I think right now is not a bad valuation. One of the biggest, if you actually look at Pinterest's last earnings, were actually really good. Like the growth was good. They're really starting to ramp up the revenue from a lot of the European users, is where they grow a lot of their revenue. The key thing is what it always gets judged on is monthly active users. We've kind of heard that monthly active users are struggling at the moment as it goes through these tough CV comps, but the news is that potentially we could see it's starting to move back into user growth. So that will probably be one of the key things that moves the stock, is if it has good or bad user growth. Even though I personally, that won't be the key metric I'm looking for in these earnings. The key metric I will be looking for is ad revenue per user, and if that's still increasing international, because that's one of the key drivers for me. So yeah, this is normally quite a volatile one. This I would expect this stock to move anywhere between 5% to 20%, either on the upside or downside, or when it comes to earnings. It's always a bit of volatile one. Pinterest, very much like Snapchat, that's quite volatile as well. So that's a key one for me. Going on to Tuesday, Uber, Caterpillar, BP, JetBlue, Marriott, not really any ones that I am interested in. Used to be a shareholder of Uber. I sold that for a 35% profit, I think it was, a while ago. I used to be an owner of Ferrari stock when it IPO'd on the stock market around 2016, 2017. Made about 100% return on that one, actually. Probably none of you guys would even be watching me on YouTube when I was doing that, but it was a really good stock. An IPO that got absolutely destroyed, way below what it should have done, and then did absolutely fantastic. Tuesday after the close, AMD. I'll be tracking AMD, not a company that I personally own. I know a few guys are interested in it. PayPal, so this is the big one for me on the Tuesday. So PayPal are going to be reporting earnings. So PayPal has had a bit of a pop recently. A lot of the news about potential Elliott management coming in and buying a stake in this company. I think that because it's had a bit of a run up, I would be a bit wary that it has a bit of a pullback because of the run up that it's been in going into earnings. The key thing for PayPal will be the outlook. We've had like back-to-back quarters of downgrade on outlook. So if PayPal put like okay numbers in and then don't change your outlook, it could actually do quite well off the earnings report. The key thing will be outlook, I think, for PayPal. So looking for some okay numbers and a decent outlook, and it should do okay. My only little worry is that it's had a bit of a run up going into earnings. So yeah, I'm looking forward to this one. So we've got PayPal. Hopefully they do a good strong second half guidance. SoFi, Airbnb. Airbnb is actually really interesting because I really like this company. I really like the business, but I don't like the valuation. That's the key thing. But this company, since its IPO, has basically been flat. Well, it's actually down 20% since its IPO. So this actually puts it a bit more of an attractive valuation now. I still don't know if it's attractive enough for me to buy it. But this is, it's been basically, if you look at that, it's a year and a half of the stock basically doing nothing. So yeah, I'll watch Airbnb. I'll definitely check their earnings out. It's a company that's high up on my watch list that I want to own. I just haven't got the right valuation. But now that it's kind of been here for a year and a half, I might run some numbers on it and see where we're at, because that valuation, maybe the financials have kind of catch that valuation up a little bit right now. Starbucks, this was very close to me buying in the peak drop. It's had a bit of a run up with a few stocks that have had a run up recently. Very close to buying that one, but I'll check them guys out. So it'd be interesting. Also worth saying actually that on this list here, this is Earnings Whisper's most anticipated earnings. So there's actually a few companies that I own that are reporting earnings this week that are not shown on this list. So I believe like on the Thursday, I think like off the top of my head, I think like Corsair is potential on Thursday. I believe Callaway Golf's on Thursday as well. So there's a few more on this that is reporting that isn't on this list. So just bear that in mind. SoFi, I know a few guys, I can't remember if I mentioned it. I know a lot of you guys are really interested in SoFi as well. Wednesday, we've got Under Armour, Moderna, CVS Health. Not really any ones that in particular I'll be looking at there. After the close, Lucid. I think some of you guys might play Lucid. Robinhood. Mercado Libre is definitely the one that I'll be looking at on the Wednesday after the close. I was very close to pulling the trigger on Mercado Libre when it hit the 700 range or 600 range even around this June time. Obviously since then it's been on a little bit of a run up, so you can see when we kind of hit this kind of bottom here, it is up 32%. So yeah, I mean, I still might pull the trigger. We'll see what happens, because the thing at the moment is I've had quite a few stocks run up. So there's something like I was prioritizing buying the likes of, say, like InMode. I don't really want to buy that one anymore. Hims, that's had a bit of a run up now. Even PayPal's having a bit of a run up at the moment, but I think I'm still okay buying that one. Google's a little bit on the edge at the moment. So you can see Celsius as well. There's another one. So there's a few stocks that I've been buying in this dip that have kind of run up now, and yeah, now it's kind of freed me up that, okay, I can't buy them opportunities anymore. So rather than just every week buying the same stock all the time, I want to make sure I still build up a diverse portfolio. I think that could potentially be a really good addition to my portfolio. So we'll see what happens. They actually had a really good earnings report last earnings season. So yeah, I'll probably keep an eye on Mercado Libre on how they report on Wednesday. Thursday, we've got Alibaba, which had a really tough time actually. It was having a little bit of a bounce with a lot of other stocks, as you can see here, up 32%, but whoa, this last month down 21%, and actually since July, a lot of more fear coming into these Chinese stocks at the moment. So I think it's not a bad opportunity really, so we'll see what happens here. Alibaba is just one of those prime, I've got to say, it's one of those prime stocks that what you've had at the moment is the rise of like really bearish investors on the YouTube scene, and like, oh, this is because people can't value stocks. And then half of the like value investors on the YouTube scene came on and said, Alibaba works out as a really good valuation. Oh, do a DCF, it looks a really good valuation. And they've been absolutely slaughtered, like over 50% on Alibaba. And it's just proof that you can't predict where the market is going to send stocks down and how much that fear takes the stock price down. You can't predict the bottom. And obviously I'm a fan of Alibaba, and I'm a big believer on, when it dips, you keep buying, and especially if you want to buy a stock and it goes lower, you want to be capitalized on that opportunity. But it's one of the stocks that's made me laugh. Intel was exactly the same when it reported earnings last week. Another stock that everyone was like, oh, as a value investor, it looks absolutely amazing on DCF. And then it got absolutely slaughtered. And it's like, yep, that's it. You can't predict. If they come out with a stinker earnings, you cannot predict that. And it goes lower. No DCF, no investor in the world can predict where stocks are going and where they're going to bottom. All you can do is capitalize on good opportunities and hold for long term. And those are the sort of stocks that have made me laugh loads over these last few months. Anyway, getting back on topic, Kellogg's, Crocs. Crocs is actually really interesting because, I don't know how they do it. I'm sure you all know what Crocs are, the kind of plastic shoes. And the sales is just absolutely phenomenal. Like, the last earnings was absolutely insane, and the business is like absolutely on fire. It's at 6 times earnings. The stock is massively sold off. You can see it's down over 73%, even though the company's absolutely performed amazing. It has had a little bounce, as you can see here recently. It's up 47%. But it's still at 6 times earnings. And if we were to look at the financials that they recently put in, they were unbelievable. And I'm just looking at it going, every kind of like metric and growth at the moment, I just can't get my head around buying a company that just sells them shoes. But everything you look at that business is absolutely on fire at a cheap valuation. And I don't know really, because if I didn't actually if I didn't know what they sold and I didn't know the business, if you showed me this company on paper, this is an absolute steal of a buy. But I just think, can I invest in this company that sells Crocs? I don't know. I'd be interested to hear what you guys think about this one in the comment section, because it's just nuts. It's nuts. Datadog, that was a gem of the stock market, and that's been absolutely killed. Paramount, Lilly's, Penn National, that will probably move DraftKings, even though it reports on Friday. AMC, Block is interesting. I would definitely keep an eye on Block, one that I own. Very good valuation, I think, right now. So we'll see what happens with Block. I think that they'll probably get a little bit of slaughtered because of the maybe the acquisition of Afterpay and the crypto kill-off that's happened at the moment. So the numbers might not look good on the actual outside, but when you dig in, if you have a look at the kind of like service revenue and stuff like that, as long as that's good, that'll be what I'm really keeping an eye out for. Block. Let's have a look. Is there any more before we get to the king? So we've got Warner Brothers, Discovery. I know a few guys are interested in that one. Fubo TV, Twilio, Cloudflare. That used to be a really popular one. It's been struggling a little bit. And then before we get to the king on Friday, Canopy Growth, Western Digital, Goodyear. But yeah, obviously this one here, the king, the one that I am looking forward to all week. I look forward to it all week, and then it gets to the Friday, and then I go, oh my god, like, it's DraftKings that are reporting, and it's like, get a little bit nervous before they actually start reporting earnings. So DraftKings, my thoughts with DraftKings, obviously it's at a very cheap valuation. Q1, if we go back to Q1, was phenomenal. Don't know if any of you guys remember Q1, but they was the EBITDA guidance was phenomenal. The revenue beat was absolutely insane. We move on to Q2. Q2 is obviously more of the weaker time for DraftKings because it has, you kind of get some NHL season. You get none in the NFL season. I think you might get the Major League Baseball season, but I don't believe you get the NBA season. So Q2 is normally the quiet one. So not sure on what they're going to do revenue growth wise. Also, taking into consideration, since then there's been the Canada launch, the Ontario launch, so potentially could we see a bit of an explosion in there. We have the first quarter, I believe, of the GNOG acquisition coming in. So how much will that help? I don't know. There's a lot of unknowns in this quarter. Normally I go into like last earnings for DraftKings. If you were watching it, I said they're going to kill it. Like the guidance that the analysts were going for was quite low down, and they smashed it. Going into this quarter, there's so many unknowns that I cannot predict. I have no idea what they're going to deliver. It's same on the EPS. Q2 is normally a bit of a lower spend. For Q1 and Q4 is normally the bigger spends, and Q3 there's a bit of a ramp up actually, because that obviously goes around the NFL season. But Q2 is normally the one with less spend, so what they're going to come in from that point. But then also you got to take in consideration the Ontario launch. I mean, I don't know if there'll be many costs with the GNOG launch as well. So there's a lot of unpredictability, and you can see here on the analyst expectations on EPS, you got 0.8, you got 1.03. On the high side, you got 0.47. There's nearly like a 0.6 difference between all the EPSs here, which is insane. So no one really knows what they're going to come in on that EPS side of it, so we'll see what happens. I have no idea. Revenue obviously is probably one of the more key things to be looking at. Analysts are quite strong here. They've gone for 46%. Now 46%, I would, considering they've had the Ontario launch, they've had the GNOG acquisition come in, I would probably expect them to be the 30% ranges. I would say that they could potentially deliver in that 40% range. So yeah, I think analysts have gone a little bit higher this quarter. I think they're a little bit more optimistic than last quarter, and I thought they were a bit low in last quarter. I think this quarter they're a little bit high. I mean, if GNOG do deliver 46%, I'll be very happy. If they come in 50% rate, they'll absolutely destroy it. And we'll see how they're controlling costs as well. So same again though, on the analyst side of it, you can see here there's a big difference. You can see here that the low estimate's 400 and the high estimate's 450 as well. There's a big variety in the differences that's been offered on the analyst expectations. So I don't really know. I'm generally a little bit anxious going into this earnings because I don't know what they're going to come out with. Like last earnings, I went in confident. I knew they were going to smash numbers because they were really low bowling. But because there's so many unknowns here going into this ones and new factors that are playing, I have no idea. So it's going to be interesting. So yeah, we'll keep an eye on that one. Obviously, I'll probably make a dedicated video on DraftKings as I normally do and break down the conference call and key points that I picked out on. Be interested to hear some profitability points of view as well, and see how that's going. And be good to hear what they say about GNOG as well. So yeah, it's going to be crazy. Another crazy one anyway. It doesn't get any easier as the week goes on. In fact, as it gets on through the week, you think, oh, Friday it's going to be a bit of a chill day, and then boom, DraftKings report. So yeah, we'll see what happens. Let me know what you're looking forward to anyway, guys. I hope you enjoyed it anyway, and I'll see you on Monday for another video. Catch you in a bit, guys.